Hi, Stephanie Beninati here with Strategic Insurance Services. And today we are finishing off our three-part series in understanding how premiums and rates work. And today we're going to talk a little bit about audits, kind of a pay now or pay later scenario. So obviously everybody wants to pay as little insurance as possible. I don't think anybody's raising their hand saying, please let me pay more insurance. So let me give you more money, insurance carrier. So what we want to do is we want to make sure though that we're being thoughtful of how we approach our premiums so we don't end up having a huge audit. Audits are, you can have an audit every year at the end of your policy, because what we're doing is we're projecting a number, either a gross revenue or subcontractor cost, based on business we really don't even have yet. I mean, we may think we have it, but many things could fall out. So we don't want to go too high, but we also don't want to go too low, because like anything else in business, the more that you have, the less they're going to charge. They're going to less you have to pay. So for example, if you're doing 5 million in gross revenue, you're going to have a much lower rate than if you did 1 million or even 500,000 in gross revenue, or subcontractor costs, either one. So the more business that you do, the lower the rate. So we really want to make sure that we're not going so low just to get a good and inexpensive policy, because what happens is, and I'm just going to use a number, don't hold me to these numbers, it's just for an example, but say you have a $10 rate at $1 million, so that's $10,000, but you have a $7 rate at 5 million, and so that's $35,000. So obviously the $10,000 rate looks more uh, lucrative. I mean, it looks, like it's better, right? You'd rather pay 10,000 than 35,000. Okay. But if you end up doing 5 million, then you have $3. You're going to pay the rate that you locked in at a million. So you've got $3 over, right? $7 to $10 is $3 difference. So now you're looking at paying $3 on $4 million. So that's an extra $12,000 on top of, the 35,000 that you would have originally paid. So I know it's a little bit of cowboy math, but that is pretty much precisely how they sort of negotiate it. So you want to make sure that you get a good rate, but if you think you're going to do 5 million, using this number as an example, but you're not sure because you haven't locked it in, then definitely negotiate with your agent a rate that would support 5 million. If you don't end up doing 5 million, you end up staying at 1 million, then you might at the end of the year have to pay the $8 rate. But you can also call your agent in the middle of your policy if you end up getting a huge project that you had not expected, and try to renegotiate. Whatever you do, you want to just make sure you do it before the end of the policy. So those are some examples of how to maintain a good audit, and mostly an expected audit. And so you're paying at the end of the year what you expect to pay. If you have any more questions about this, please give us a call, and we will be happy to talk to you more about audits. Have a great day. Thanks.